This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, welcome back to Invest Like a Pro. This is Joe Rabil. And what I'm going to talk about today is the moving average. And I like to use an 18 simple MA and a 40 simple MA, sort of like buddies, working them together. But I do want to start at the beginning, kind of give a clear explanation of the different uses of a moving average. And I think it'll be important and a good review, even for those who have been using moving averages for a while. You might not realize some of the things you can use this for. So let's go ahead and get going with this. I talk about this in more detail in the book and in my courses. You can start with the book. It is at a discount right now. Go to rabilstockresearch.com/book for more information. Okay, so I've got 4 charts up. My standard grid with monthly in the bottom left, weekly bottom right, daily upper right, and hourly in an upper left. And I've taken off everything. I did leave the volume at the bottom, but I've only got the moving averages now. I don't have any other indicators that I'm using right now because I wanted to make this pretty clear. And I do have both a 18, which is this magenta colored line, and then this blue line is the 40. That's a simple moving average. Both of them are simple moving averages. Now in gray, just and I've kind of taken down. It's not a strong. You can't tell that it's even there sometimes, but it is a 4 MA that's in gray. That's kind of tracking the price action. But I want to focus in on the 18 today, and mostly and how it does relate to the 40. But just to give you a quick understanding of what a moving average is. So if I've got an 18 MA, that is taking 18 prior closes. Well, it's actually including today's action as well, but it's taking the close of the last 18 bars and figuring out what that average is. Okay. And that's just taking, adding them all together, dividing them by 18, and it gives you a number. And then you go back one more day and you have another moving average. So it's essentially giving you a trend. Now there is obviously lag because as I add a new day, it's going back, it's basically going back 18 days. So today's action is incorporating in 18 days going back. And one thing you got to realize about that is that price is actually going to move a lot quicker. But what that does for us is that it can tell us a number of different things. So first of all, if you have price as your indicator and you're looking at the trend of the price and watching the swings, then that should give you a lot of decent feedback in the trend. However, the moving average can do that for us. If we get a move like we did here on the daily chart, a move up off of the low in October last year, pull back, and we go to a new high, we're essentially seeing this shift in the trend. Well, look at what the 18 does. It was down, and right as that was shifting back to the upside, this moving average starts to turn up. And it has been basically rising until just recently. So throughout this whole period, we're getting this positive feedback that the trend is positive. If the 18 MA is rising, all right, there's a pretty high probability that there's some form of trend on that time frame. And when I'm looking at trading opportunities, the 18 is going to play a big role on that time frame. If I'm looking for a pullback on that time frame, I'm usually focusing in on the slope of the 18. All right, very important to keep an eye on. The slope of this is down now on this time frame. So in most cases, I would be not necessarily looking for a long play on this time frame. All right, now I could use this as an opposing trend trigger, the lower time frame when this is down, and still play it to the upside. But if I'm using this as my trend time frame, then this is the only trades I can really take off this time frame or to the downside based on that. All right, now when we incorporate the 40 into that, we can also get a really good idea of two things. Number one, do we have a confirmed trend? Because sometimes you can start to swing this to the upside and it's really just a part of an ABC rally back. It's a minor reversal of the trend. So the 18 is rising, but we don't have confirmed evidence. We only have presumptive evidence of a change in trend. All right. Once this crosses over and we get both these moving averages rising, and price is above both line, or at least above the 40, we know we have a confirmed uptrend in place. And this is a great supplemental tool that can be used with the price action. So, you know, if you're using the 1, 2, 3 reversal pattern, you know, I want to look for that type of pattern to develop. Sometimes you don't get like, and this is a great example at this low. We had a reversal off the bottom and it took off, and you really didn't get a higher low until way back here. But we had confirmed evidence on the moving averages that things had turned up here. So this is a great supplemental tool to determine the trend. All right, that's confirmation of a trend change. The same thing holds true here. If this turns down and both of these are declining and price is below the 40, then we know that this is shifting down. At least on this time frame, it has shifted down. All right. So one thing we definitely want to be watching for is trend and trend confirmation. So that's the two things we've discussed so far. The other thing that when you start to incorporate the 40 in, you can start to get a feel for the momentum of a trend. You see how these two lines are going at about parallel? I don't really have to look at the ADX when it's early in a breakout and we get this kind of a move. I know the ADX is probably pretty strong to the downside. This is probably a pretty strong trend. And I can see that just based on the way these lines are sloping. Now, the same thing holds true here, but after a while, and it's been going for a while, you really need the ADX to be able to see, because during this whole period, and what I've been discussing now for the last month or two, is how the ADX has dropped off and was giving us a leading indication that there was exhaustion in the trend. You really couldn't see it in these. So that's where that is going to add some value. But for the most part, when you have, especially in the early part of a trend, if you have parallel looking lines, they're basically going up at about the same rate, you're in a fairly strong trend. By the way, if you're enjoying the content, hit that like button and also subscribe. So now we're looking at the early signs of trend reversal, confirmed signs of trend reversal, both using the moving averages. Now, when we use these two moving averages as a buddy system, we can get the momentum of the trend. We know how strong the trend is. All right, so those are the three things. Now, there's other things that we want to keep an eye on, and that is look at how far away we are from the 18MA. Now, this is where the 18MA plays a much bigger role than the 40 for me. All right, 18, we've gotten away from the 40, or at least we did, as this was 4 or 5 months up on the monthly chart. We got away here, and now we're actually getting away on the short term. So when we get stretched away from a moving average, and we have back-to-back moving averages doing that, we want to be on the lookout for signs of a reversal. And here's where the momentum starts to slow down. We're on the alert, and now I think we're going to start working our way back. We've obviously worked back to this line. The question becomes, do we actually work back to the 18-month line? But the point I want to make here is, once you get too far away, and it's an eyeball, you don't necessarily sit there and have a percentage or anything like that. You're just looking at, okay, I'm getting a little bit too far away. It's almost like a leash with a dog. You get too far away, it pulls it back. All right, so you want to be on the lookout for that. So we're kind of doing the same thing here on the daily chart right now. And there's probably, I mean, I would think there's a pretty good chance sometime here over the next 2 to 3 days, we get some kind of at least an attempt at a retracement just based on how far it is. So I'm going to continue to review each of these as we go through. So the first is signs of trend reversal. Okay, early signs of trend reversal using the 18, the slope of the 18. Confirmed signs of trend change is when the 18 and the 40 flip to the other way and they're both moving in that direction. So in this case, they both turn up, 18 crosses above the 40, and both lines are rising. We know we have a confirmed shift in the trend on that time frame. All right. Now, when both of these lines are moving up at about the same rate, at least early part of the trend, you know that you have a pretty strong trend in place. So that's the momentum. All right. And then when you get too far away from a moving average in either direction, that's giving us an overbought and oversold indication. All right. Just using the 18 for this, just to get too far away from the 18, expect it to look to retrace. Now, you can do this on all moving averages, including the 4. So if you get too far away from the 4, you see how you get too far away from the 4, you can expect a pullback. And this will happen over and over again when this takes place. If we get too far away from a moving average line, it will retrace back. This can be a very useful tool on the short-term 4MA for your timing. All right, but when we get too far away from the 18, we want to be aware of that because it's usually pretty important. Now, lastly, what I have found is that a lot of times these moving averages will define trend support. So this is 467 on the 40. If I draw a horizontal line here, that happens to be the breakout level. Notice how that is exactly where the 40 is. All right. I notice just quite often that price trend support and moving average support can often overlap in a lot of ways. All right. So there's the trend. There is price support, and that's essentially where it was kind of pulling back in the area of the 40, which was still rising. Now, the other thing I would suggest to you about the slope of these moving averages is when you have slope to the moving averages, you should assume that is what I would call trend support, all right, as opposed to price support. This is price support. And when you have trend, and especially when these lines are kind of working together, you ought to think about the 18. The area of the 18 is what I would call trend support. And that's really where we're looking to be a buyer on near trend support. If we have a trend in place where the 18 is above the 40, both lines are rising, we want to look for pullbacks to these moving averages as opportunities. All right. Now, there is other uses for this that I go into a lot more detail, where if we have a trend on one time frame that we're pulling back to, then we can use the moving averages as sort of like an opposing trend signal. If we get back above both of the moving averages on the lower time frame, that's a sign that things are shifting back to the upside. It's almost like a failed declining move, right? We're both lines are kind of rolling over, and now we're moving back up. So that is another use for it. But the main ones I wanted to talk about today were the early signs of trend reversal using the 18 MA by itself. When you use the 18 and the 40 together, you can get confirmed trend change, right? When those two lines are moving up at about the same rate, we can help define the momentum without even looking at MACD or ADX. If you get too far away from the 18 MA in either direction, it's giving you a sign of overbought, oversold. And then we can also define the trend. It gives us help with price trend support, often the moving average as well, but also as trend support in a trend. When a stock is moving, we can look to buy pullbacks or sell rallies at or near that 18 MA when there's a decent trend in place. All right, so those are the different uses and the reasons why I like to use the 18 MA. The one point I'll make is that you can use a 20 instead of an 18 if you want. The reason why I use an 18 is because I like the slope shift is a little bit quicker, and I think it adds a little bit of value from that standpoint. All right, hope this is helpful. Go ahead and let me know if you have any questions. Thanks.